Welcome back. I'm still with Mr. Vicky Amarnani from Monex Invest in the Futures in the last segment of our discussion. So unfortunately, this is the last segment, but that's okay. Before we talk about the currency, but related to the U.S. bombing in Boston, is there any impact on the economy or the stock or maybe anything?
My view, no real impact.
No. Okay.
I mean, the market has become so immune, you know.
Okay.
I mean, they've become so like insulated. In fact, I mean that any bad news that happens, like a bombing, they know it's a temporary effect. In fact, the market, you know, maybe dropped due to other reasons because there was some negative news on the retail sales. But the U.S. bombing was of no impact, according to me. I mean, the market's become in such a way that they've seen the Greek crisis, the Spanish crisis, Italian crisis, that any problem that comes, markets like, you know what, rather than I sell and then buy again, they'll sort it out anyways.
Okay.
You know, people who are longer-term investors that support the market think, look, it's not a big issue, it'll be sorted out anyways. So when the panic comes in the market, it's going to come in an extreme way. I mean, there has to be such an extreme panic that everybody will try to sell at one time. But unless then, market is healthy, people know there's a high uncertainty, but the show must go on.
So market getting immune, and then the futures is one of the best option for investment, right? So.
Yes, I mean, when we say futures, I mean, you can trade the market because there's good volatility. You can trade both sides. There's two-way market opportunity. Even the U.S. stock market is a good opportunity because now U.S. interest rates are 0.25%. But after you cut tax, you only get 0.1% per year. So people rather buy U.S. stocks, blue chip stocks, where they get dividends of 2-3% on AAA companies like Johnson & Johnson, Disney, Microsoft, solid companies that, you know, 10 years down the line, these companies will be there, the stock price will be higher, and meanwhile, I'm getting a dividend of 2-3%, much higher than the interest rate. So they're not worried about capital gain and loss. And that's supporting the stock market. So you have to be a little selective on what stocks you choose, and maybe dividend stocks are the right way to go.
Okay. So now what about the currency, US dollar or maybe Australian dollar?
Okay, my view, okay, let's start with the US dollar index. Definitely from your portfolio, you should have some exposure to dollar because we cannot forecast what negative news is going to come to the market, but that's going to have a positive impact on the US dollar. So you should keep a certain, maybe even 20% of your portfolio at least in US dollars. But again, it depends will the dollar strengthen or weaken depending on which currency we're talking about. For example, if you talk about the euro, I see the euro being slammed down this year because, I mean, it doesn't make sense. A currency which is under a crisis for their exports, you know, the euro does, unemployment rate in the whole eurozone, including strong nations such as France and Germany, has at all-time record high at 12%. Their exports are reducing, they're not competitive. It doesn't make any sense. So the euro has to come down. In fact, from the level of 1.31 now, I see the euro coming back down to 1.26. For the sterling dollar, that's another sell to do. The sterling dollar recently rallied close to 1.54. Wow. Now it's trading at 1.5150. With it being downgraded from AAA to AA, weak retail sales, it's already under recession actually. They've had 3 quarters of negative GDP. The pound at this rate is not competitive. It has to come off. In fact, I see the pound at least going to 1.47. So any rally, which actually euro and sterling have had a rally, is a sell on rebound. But the Aussie dollar, for example, it's a nice range bound, 1.01 to 1.07. So, you know, at these levels, Aussie would be a good level to start picking up. Why? Because it has a nice carry trade at 3%. Despite the cutting down of interest rates, they may lower interest rates, but Aussie, at parity, I think there's extreme value. And when the market goes on risk on mode, the Aussie dollar will rally again. So trade the range on the Aussie dollar, or at least if you buy it on the spot trading, you at least get a carry. So, you know, buy on dips on the Aussie dollar. I do not see the Aussie dollar going below 1. Another currency, which is the currency of the year, which people think have weakened too much, is dollar yen. Dollar yen from like last September, October has rallied from 76 now to 98. So people think, you know, the show is over. People said dollar yen will touch 100. It has approached 100, and that's it. I think the dollar yen can go to 110 because they've mentioned they're going to do unlimited printing. That means the currency will weaken, the dollar will strengthen until they reach an inflation target of 2% in 2 years. And Shinzo Abe, the new governor, are very supportive of these points. So any correction on dollar yen is a time to buy. Every investor is scared that they'll miss the train. So it's buy the dollar yen, sell euro on a rebound, sell gold on a rebound, sell sterling dollar on a rebound, trade the Aussie dollar on a range. Another interesting one is oil, actually.
What about oil now?
Oil has had a strong fall actually, and people think that it's a good time to buy oil. Oil is now at 86. in the last 1 week, 10 days, it's dropped from a level of 89.90,
Okay.
which is now a very strong resistance. But if you look at oil, there is no reason for oil to strengthen so much because, firstly, the dollar is strengthening.
Yeah.
Secondly, the IMF has lowered the forecast for global GDP by another 0.3%, expecting growth of 3%.
Yeah, yeah.
US GDP only grew 0.4. China GDP is slowing down. Indonesia is healthy, but from 6.5 to 6.2, people are forecasting maybe 5.8 next quarter. So there's slower growth. Obviously, slower growth, less demand for oil. US oil production is near all-time highs, or at least at 30-year highs. Their production from last year has increased by 10%. They're looking for alternatives. The economy is suffering. Europe is under recession.
Yeah.
I mean, you know, okay, maybe the OPEC countries may reduce the supply to keep the support of oil, you know, for their budget purpose. But for oil now to exceed $90 is very difficult. I would only buy oil if it drops below $80. But if not, any rally above $87 is a good sell on oil.
Okay. As a conclusion, please give a suggestion to the investors and the traders for this condition of gold, sir.
Yes. So basically, I mean, as we had discussed earlier also, on gold, investors, you can buy maybe 30% of allocation. You may get an opportunity to buy below 1,200. I mean, we cannot forecast the market. The lowest, the low was just yesterday. I mean, not yesterday, day before was just the low. We do not know how this market will go. But if in the next 1-2 days we see gold comfortably go above 1,400, maybe that has bottomed out. But if we see a further fall, we could see a fall even closer to 1,170. But again, 1520, which was a strong support, is now a very strong resistance. Like how people didn't imagine gold to break 1,520. For gold to go above 1,520 is extremely difficult. At least in the next 3 months, I do not see that.
Okay, thank you so much for your time and sharing. Good luck with that, Mr. Vicky Amarnani. That was Mr. Vicky Amarnani from Monex Invest in the Futures talking about gold existence as the safe haven. And up next, we have some more updated news and business information. Stay with us.